English Podcast Hub. Okay, I need help. Like, seriously, I'm about to lose my mind here.
Whoa, Mia, what's going on? You sound stressed.
I am. I just opened my first bank account in the US, right? And I downloaded the banking app like they told me to. And now I'm looking at it and there are two different balances. One says checking $500 and the other says savings $100. What does that even mean? Why do I have two accounts? I only opened one.
Okay. Deep breath, Mia. This is actually totally normal, and I'm really glad you brought this up because this confuses so many people. Welcome to English Podcast Hub, everyone. I'm Mark,
And I'm Mia, and I'm very confused.
and today we're diving into one of the most fundamental banking topics, checking versus savings account. Which one do you really need? Because trust me, understanding this will save you money, stress, and a whole lot of headaches.
Yes, please explain this to me like I'm 5 years old because I genuinely don't get it.
All right, let's start with the checking account because that's probably the one you'll use most often. Think of your checking account as your wallet, but in digital form.
My wallet?
Yes, it's the account you use for your everyday spending, buying groceries, paying rent, getting coffee, all that stuff. It's designed for frequent transactions, meaning you can take money in and out as many times as you want without any penalties.
Okay, so basically it's the account I use for living?
Exactly. Here's the thing. When you opened your account, the bank probably set you up with both a checking and a savings account automatically. The checking account is connected to your debit card, which is that card they gave you.
Oh, so when I swipe my card at the grocery store, the money comes out of my checking account.
Bingo! And here's some key vocabulary you need to know. First, direct deposit. This is when your paycheck goes directly into your checking account instead of getting a paper check.
Right, my employer mentioned that. They said they'd set up direct deposit.
Perfect. So every time you get paid, the money automatically goes into your checking account. Then you can use that money to pay bills like rent, utilities, phone bills, or you can withdraw cash from an ATM, which stands for automated teller machine.
Wait, so ATM withdrawals also come from my checking account?
Yep, unless you specifically select savings when you're at the ATM, it defaults to checking. And that's totally fine because remember, checking is designed for frequent access to your money.
Okay, this is starting to make sense. So checking is like my everyday money that I'm constantly using.
Exactly, you got it. Now let's talk about the savings account, which works very differently. If checking is your wallet, then savings is your vault, or better yet, your piggy bank. It's where you put money that you're not planning to touch for a while.
Wait, let me get this straight. So I'm not supposed to use my savings account for daily stuff?
Correct. Savings accounts are designed for two main purposes, building an emergency fund and saving for specific goals, like a vacation, a car, or a down payment on a house.
Emergency fund. I've heard that term before. What exactly is that?
An emergency fund is money you set aside for unexpected expenses, like if your car breaks down, you have a medical emergency, or you lose your job. Financial experts usually recommend having 3 to 6 months worth of living expenses in your emergency fund.
Whoa, that's a lot of money.
It is, but you don't have to build it all at once. You can start small, even $20 or $50 a month, and gradually build it up over time. The key is to keep it in your savings account where you won't accidentally spend it.
Okay, so savings is for emergencies and goals. But why can't I just keep everything in my checking account? Why do I need two separate accounts?
Great question. There are three main reasons. First, savings accounts typically earn interest, which means the bank pays you a small amount of money just for keeping your money there. It's called APY, annual percentage yield.
Wait, the bank pays me?
Yes, it's usually a small amount, like maybe 0.5% to 4% depending on the bank. But over time, it adds up. Checking accounts usually don't earn interest, or if they do, it's much lower.
Okay, so reason number one, I earn money. What's reason number two?
Reason two, savings accounts have limited withdrawals. By federal regulation, you can only make 6 withdrawals or transfers per month from a savings account. If you go over that limit, the bank might charge you a fee or even convert your account to a checking account.
Wait, what? So I can't take money out whenever I want?
You can, but only up to 6 times per month. And here's the catch. This limitation is actually helpful because it prevents you from impulsively spending your savings. It's like putting your money in a piggy bank. You can break it open, but you have to really think about whether you need to.
Oh, so it's kind of forcing me to save by making it slightly harder to access?
Exactly. It's a psychological barrier. And reason number three is security. If someone gets access to your debit card, they can only drain your checking account, not your savings. So it's safer to keep most of your money in savings and just keep what you need in checking.
Wow, I never thought about it like that.
All right, let me summarize this with our metaphor. Your checking account is your wallet. It's for the money you're spending this week or this month. You carry it with you everywhere, you use it freely, but you don't keep all your money in it because wallets can get lost or stolen.
Right, that makes sense.
Your savings account is your vault or piggy bank. It's for money you're protecting for the future. You don't access it every day. In fact, you only open it when you really need to, like for emergencies or when you've hit a savings goal.
So basically, I should be moving money from checking to savings regularly.
Yes, a lot of people set up automatic transfers. For example, you could set it up so that every time you get paid, $100 automatically moves from checking to savings. That way, you're paying yourself first and building your savings without even thinking about it.
Oh, that's smart. So I wouldn't even miss the money because it happens automatically.
Exactly. It's one of the best saving strategies out there. And here's a phrase you'll hear a lot: saving for a rainy day. It just means setting aside money for unexpected problems in the future.
I love that expression. Okay, so now I understand the difference. But what about fees? I'm terrified of getting charged random fees that I don't understand.
Okay, this is super important, so listen carefully. There are two main fees you need to watch out for: overdraft fees and minimum balance fees.
Overdraft. I've heard that word and it sounds scary. What is it?
An overdraft happens when you try to spend more money than you have in your checking account. For example, if you have $50 in checking and you try to buy something for $60, that's an overdraft.
And the bank charges me for that?
Oh, yes. Most banks charge around $30 to $35 per overdraft. And here's the nightmare scenario. If you overdraft multiple times in one day, you could get charged $30 for each transaction.
What? That's insane. So I could accidentally spend $10 extra and end up paying $30 in fees?
Exactly. That's why it's so important to keep track of your balance. And here's a pro tip. Most banks offer overdraft protection, which links your checking and savings accounts. If you overdraft checking, the bank automatically transfers money from savings to cover it. There's usually a small fee, like $10, but it's way better than $30.
Okay, I definitely need to set that up. What about minimum balance fees?
Some checking and savings accounts require you to maintain a minimum balance, let's say $500 or $1,000. If your balance drops below that amount, the bank charges you a monthly maintenance fee, usually around $10 to $15.
So they charge me for not having enough money? That seems backwards.
I know, it's frustrating, but here's the good news. Many banks waive this fee if you set up direct deposit or if you're a student. Always ask about fee waivers when you open an account.
Okay, I'm definitely going to check on that. But what if I already got charged a fee? Can I get it back?
Sometimes, and this is where we get to the role play. Let's practice how you'd call the bank to dispute a fee. Okay, I'm going to be the bank customer service representative, and you're going to call me because you just got hit with an overdraft fee. Ready?
Ready. Hi, I'm calling because I saw a $35 overdraft fee on my account and I'm not sure why it's there.
Okay, let me pull up your account. I see here that on March 10th, you made a purchase for $52, but you only had $48 in your checking account at the time, which triggered the overdraft fee.
Oh no, I didn't realize I was that low. I thought I had more money. Is there any way to get this fee waived? This is my first time overdrafting and I honestly just made a mistake.
I understand, and I appreciate you calling. Since this is your first overdraft, I can make a one-time exception and refund the fee as a courtesy.
Oh my gosh, thank you so much. I really appreciate that. And just so this doesn't happen again, can you help me set up overdraft protection?
Absolutely. I can link your savings account to your checking account so that if you overdraft in the future, we'll automatically transfer funds to cover it. There's a $10 transfer fee, but that's way better than a $35 overdraft fee.
Yes, please. That would be great. And one more question. Can I set up alerts to notify me when my balance gets low?
Yes, you can set up text or email alerts in your online banking app. You can get notified when your balance drops below a certain amount, like $50 or $100.
Perfect. Thank you for your help.
You're welcome. Is there anything else I can help you with today?
No, that's everything. Thanks again.
Okay, great job. You hit all the important points. You explained the situation politely, you asked if the fee could be waived, and you took steps to prevent it from happening again.
That was actually kind of empowering. I didn't realize I could just call and ask for a refund.
Absolutely. Banks will often waive fees, especially if it's your first time or if you're a good customer. The key is to be polite, explain that it was a mistake, and ask nicely. Don't demand or get angry. That usually doesn't work.
Got it. Be nice, explain, and ask. I can do that.
And here's another tip. Always set up those low balance alerts we talked about. Most banking apps let you customize notifications so you get a text when your balance drops below a certain amount. That way, you'll never be surprised by an overdraft.
I'm going to do that as soon as we finish recording.
All right, Mia, let's do a quick recap because we covered a lot today.
Yes, please. My brain is full.
Okay, so checking account equals your wallet. Use it for daily transactions, paying bills, ATM withdrawals, and your debit card. It's designed for frequent access.
Got it. And savings account equals my vault or piggy bank. Use it for emergencies and goals. It earns interest, but I can only withdraw 6 times per month.
Perfect. And what are the 2 fees you need to watch out for?
Overdraft fees when I spend more than I have, and minimum balance fees when my account drops below a certain amount.
Exactly. And how can you avoid overdraft fees?
Set up overdraft protection, keep track of my balance, and set up low balance alerts.
You're a banking pro now. And remember, everyone, if you ever get charged a fee that seems unfair, call the bank and politely ask if they can waive it. The worst they can say is no, but often they'll say yes, especially if you're a good customer.
I feel so much better now. I actually understand my banking app.
That's what we're here for. And if you found this episode helpful, please subscribe to English Podcast Hub. We've got tons more episodes on life skills, finance vocabulary, and practical English you'll actually use.
And drop a comment telling us, do you have a checking account, a savings account, or both? We'd love to hear from you.
All right, everyone. Thanks for listening. I'm Mark.
And I'm Mia.
And we'll see you next time on English Podcast Hub.